couple of months ago in the month of November, Invesco Mutual Fund wanted to launch what would have become India's first Bitcoin ETF. But at the same time, there was a lot of noise and hoopla building around in the economy about the possible ban of cryptocurrencies, as the Indian government was getting ready to debate the cryptocurrency bill in the winter session of the parliament. In fact, there were some rumors that cryptocurrencies might altogether be banned in India. And there were also some observers in the investment world which pointed out that perhaps by giving permission to Invesco Mutual Fund to launch Bitcoin ETF, SEBI was perhaps trying to get ahead of RBI and government in allowing cryptocurrencies in the mainstream investment space. In the middle of all this mayhem, Invesco Mutual Fund then finally decided to push back its launch of the Bitcoin ETF. The fact of the matter is that Bitcoin ETF is very different from investing in cryptocurrencies, and here's how.
Blockchain got tied up with cryptocurrencies mainly due to Bitcoin, the world's largest coin with a market capitalization of over $600 billion is built on top of blockchain, an open source technology that makes electronic cash transactions tamper-proof, transparent, and publicly verifiable without the need for an intermediary. But cryptocurrencies are just one use of blockchain. A quick glance of the top 10 stocks in the underlying portfolios of both Invesco India, Invesco Coin Shares Global Blockchain ETF Fund of Fund and the Navi Blockchain Index Fund of Fund shows that the funds will invest in the likes of Nvidia Corporation, Taiwan Semiconductor Manufacturing Company, Microsoft and Accenture, and many more such companies. Navi's Blockchain Fund 2 has not yet been launched. In other words, a plain vanilla blockchain ETF buys equity shares of companies just like any other sector fund or thematic fund. Many of these funds do not buy cryptocurrency coins. Funds that actually buy such coins are typically cryptocurrency ETFs, and these are available in the US, Europe, and Canada. Blockchain ETF is a new phenomena globally with around a dozen such funds that manage around $2 billion collectively. Khalilullah Beg, founder of a wealth startup FinTap, isn't enthused about blockchain ETFs. Beg, who by the way is a big believer of cryptocurrencies, say that blockchain ETFs are a bit of a misnomer. Swapnil Pawar, founder of Neurai Blockchain, cites the example of Microsoft, held by the index funds that Navi's blockchain ETF will invest in as per its offer document. He says that companies that make computer chips are also proxies for blockchain, since most of the mining in the crypto world is driven by high-performance chips. And since these cryptocurrencies are based on blockchain technology, these chip makers and technology companies become a somewhat distant proxy for blockchain, he says. Also, cryptocurrency regulations in India are yet to be finalized, which casts a shadow over the launch of blockchain ETFs. Invesco Mutual Fund's underlying blockchain ETF invests partly in companies that are into cryptocurrency mining, which is nothing but the act of digitally making new coins by solving an algorithmic puzzle. Most investors may not even need blockchain ETFs in their portfolios, especially if their investments are conventional technology companies. Blockchain experts stress that the technology is used in many other industries where the control can be decentralized and transactions can be validated by multiple parties to bring in more transparency. Another popular emerging area where blockchain is used is trade finance in banks. It deals with the transfer of payments from one person to another, usually from an importer who is the buyer of goods to the exporter who is the seller of goods, when both are based in different countries through instruments like letter of credit.